Okay, good morning. Thank you everybody for joining. My name is Marie Ellis. I am the Director of Payroll Services here for Sequoia One. Today's webinar is going to be recorded, and tomorrow morning you will be receiving a thank you for attending email, which will include a link to the recorded version of the webinar, as well as a link to the deck, so that way you can go back and reference this information. For those of you who have been with Sequoia One for a while or were with us last year at year end, some of this content may be a little bit familiar. We had sent out a lot of these reminders and information in an email last year, and we know that that prompted a lot of questions. So we thought this year it might be a nicer way to do a webinar and actually provide an opportunity for some questions and answers at the end of our webinar to answer anything that might be outstanding or to clear up any additional questions that you might have about how to successfully wrap up the 2020 tax year. So our agenda today, we are going to go over 2020 taxable events. We're going to talk about how Sequoia One can assist with mass changes, some deadlines and due dates. We'll also talk a little bit about FFCRA and the CARES Act, and then give time for some questions and answers, as well as a few slides about some Sequoia resources that we have available to you that will also prove useful tools. So before we jump into our content, we're just going to go through some quick announcements. So first of all, I thought it would be a nice time to show you all of our payroll specialists, kind of give you an opportunity to match a face with a name. I know that a lot of times our communications every day are through email, maybe even a phone call, and you don't necessarily get an opportunity to meet face-to-face with your specialist. So just a quick moment here for you to see who all of our payroll specialists are. We have a very large group. We span across Arizona, California, and the East Coast. And then just to let you know, so our team members do have some new phone numbers since we are in a distributed workforce and everybody's working from home. Obviously, our desk phones are not a solution anymore for getting a hold of us, but we do have some new phone numbers. If you're looking for what that contact number is, you can reach out to your payroll specialist and they can provide you the best way to reach them directly. And also just a reminder, you are in this meeting today as a participant, so that means listen mode only. You'll notice that there is a Q&A chat function within the webinar today that you can use. You can ask questions in here throughout the webinar. One of our payroll specialists, Tasha, is on today's call, and she's going to be helping to answer questions as we go through the webinar. And then we'll also have our formal Q&A session at the end, and we'll also recap some of those questions. And again, today is being recorded, and replay is going to be available to you tomorrow morning. So jumping into 2020 taxable events, throughout the year, there's a lot of activities that happen. We know our clients like to do lots of generous things for their employees, but some of those items do have a tax impact. And so it's important to talk about these. It can be very easy to miss or even forget that these are there and that there is a tax liability associated with it. So we are here to help you stay compliant. Some people choose to wait until the end of the year to record all of those. So we will be talking about those deadlines, so that way you are comfortable with when everything needs to be submitted to Sequoia One and why each of these events are important to go over. So first, we're going to talk a little bit about payments and contributions that are made outside of Sequoia One. Some of these are common, some of these are less common and may not apply to you. So keep that in mind. The first one that comes up frequently for us is employee 401k contributions. So this comes up because a lot of the times when new hires are brought on, they don't necessarily communicate to you or to us that they had previously contributed to a 401k. And so we ask that any new hires let us know any amounts that were previously contributed to a 401k in this tax year. And the reason for that is because we then add the information into our system, and that can help prevent somebody from over contributing within the tax year. So basically, if somebody ends up over contributing to their 401k in the tax year, it can delay their ability to file taxes after their W-2 is provided to them. It can result in a 1099 from the 401k provider. It can increase some taxation. So the cleanest way is for us to be able to record these amounts and make sure that they're not over contributing within the 2020 calendar year. The next is commuter reimbursement. Given that we have a lot of people working from home right now, I don't anticipate this to be coming up as much, but it is important for you to know that if you made any commuter payments to your employees outside of Sequoia One, that is in excess of $270 per month, you'll need to let us know that, because the amount over $270 per month is considered a taxable fringe benefit. And then same thing with healthcare savings accounts. Again, probably not very common, but if you made a contribution to somebody's healthcare savings account outside of Sequoia One, specifically in California, New Jersey, or Alabama, you do need to let us know this, because in those 3 states, any HSA contributions are considered taxable to the employee. And then lastly is in-house or physical checks you may have written. So this comes up a lot of the times when a client might want to issue an in-house check to an employee because they want to give somebody a same-day payment. Perhaps you just quickly wrote a bonus to somebody. If that happens, we need to know about that so that way we can record that transaction in our system. That's going to allow us to assess the tax liability, file those taxes, pay those taxes on your behalf. A lot of the times, clients reach out to us for calculations. And so if you have reached out to us and we do not have a copy of that check yet, your payroll specialist will be following up with you to ask you for a copy of that check or proof of wire to the employee. This is how we can make sure that we get this recorded within the tax year, and then we don't have to worry about any W-2Cs or tax amendments in the following year. A little bit about additional payments. So these are some of the items that come up throughout the year that our clients don't necessarily know that has to be communicated to us. So the first one is stock transactions. There are some stock transactions out there that are considered taxable and that are required to be reported on the W-2. So if you have any stock transactions that occurred, you can reach out to your payroll specialist. We do have a stock questionnaire that can be completed that's going to help you determine which type of stock was it and how it needs to be handled on our end in terms of taxation and recording, and then reporting on the W-2 at the end of the year. Relocation reimbursements. This one comes up a lot because a lot of people don't know that in 2018, the IRS deemed that any relocation payment is now considered taxable. So the word reimbursement does not really apply anymore. It is not truly a reimbursement. It is a relocation payment, and that is taxable. So if you've made any relocation payments to your employees, please let us know so that way we can again get that recorded, calculate all of the taxes, and then remittance and payment. Gift cards. Gift cards come up every year for us. There's always a question of, you know, if it's a low dollar amount, do we have to report it? And the answer is yes. So the IRS looks at gift cards as a cash equivalent, which means even if you only provide a $5 gift card, that $5 gift card is taxable. So it's important that we receive information about any gift cards that are given to your employees. Another question that we get specifically around gift cards is, you know, we want to cover the taxes for our employee. Most people don't usually want to give a $25 gift card for that to then only be taxed at the end. So we can help you cover those taxes when it comes to calculations. Some of our clients ask for what's called a gross up calculation, and that is an individual calculation for each employee that can have some downside effects for you in terms of financial planning, just because the calculation is not going to end up being the same across each employee. So one of the options that we do suggest, it just helps with financial planning, it helps you know exactly how much you're recording, is if you have a gift card amount and you're wanting to gross up to cover some or all of the taxes, we suggest actually picking an amount above that gift card amount. So Say you're going to be giving a gift card for $25, you may choose to have us record the gross amount as $40 to help minimize some of that tax impact to the employee on that gift card. By choosing a flat dollar amount, you're creating a consistent amount across all of your employees, which is also nice, and then it helps you plan financially a little bit better. Fringe benefits. So some examples of fringe benefits are going to be things like gym memberships, dry cleaning, Uber and Lyft rides, leisure trips. Some of these, again, may not be very common this year, just given the environment that we're in. The other one that is a little bit altered from last year is tuition payments or student loan payments. So previously, the IRS considered all student loan payments to be taxable. However, this last year, the IRS has changed it, and now it's not just tuition payments, but student loan payments can all be tax-free up to $5,250. So if you've made any tuition payments or student loan payments in excess of $5,250, that would be the amount that is considered taxable, and that's the amount that you would need to report to us. And again, any other kind of loan forgiveness you might have given your employee, if you had an employee who had a loan for one reason or the other and you've chosen to forgive that loan amount now becomes taxable, and you'll want to report that to us as well. You can visit the IRS website, which there is a link right here in the deck, to see more examples of fringe benefits, just to make sure that you've covered your basis for any kind of additional items you might have given your employees. I do want to make one note though. A question we've received recently, if you're a client who is participating in any of our wellness bundles, the wellness bundles are not taxable. And the reason is because those fall under a de minimis fringe benefit according to the IRS, which means that it would be administratively burdensome to be able to track and or record. So there is no need to submit any information to us regarding any of the wellness bundles. And then lastly, wait time penalty. This primarily applies to people who have employees in California or Connecticut. So if you've had to pay a wait time penalty to an employee due to delayed wages, that wait time penalty at time of payment is not or was not taxed, and it actually has to be recorded on a 1099 at the end of the year. So any kind of recording or wait time penalty reporting on the 1099 is actually client responsibility. We will be running a report at the end of the year to identify any wait time penalties that were paid and reaching out to those clients, so that way the 1099 can be produced in-house. And then, but if you have any questions, you can reach out to your payroll specialist. We're happy to help find out ahead of time if you paid any wait time penalty. And then, again, just be aware that that 1099 does need to be produced and filed no later than January 31st. So employee level changes. These are important to take note of. These are 4 items that we get a lot of requests for in the new year. After W-2s have been issued, this is what prompts a lot of W-2Cs and a lot of tax amendment fees. So just really want to call out the importance of these 4 items right here and the need to audit this information. So the first is a Social Security number. If you hired an employee through the PRISM system and you did so with a dummy Social Security number, it's very important that that Social Security number is updated no later than December 31st to show the correct Social Security number. If we have a dummy Social Security number, the W-2 will be produced with that dummy Social Security number, and it will prevent the employee from being able to file his or her taxes next year. The next is permanent work office location changes. So again, this one is a little bit different given our climate, but if you have an employee who permanently changed a work location, so that is that this person has moved to another state, does not intend to come back to your office, or you've determined for the time being you are going to move employees to a different worksite location, whether it's work from home or another office that you have, please make sure you're updating these worksite locations. It can be really easy to forget this piece And it could mean that your employees have been taxed based off of a worksite location where they're no longer at. You can run a report out of it Informer. It's called the Worksite State Resident State Audit Report. And what this will do is it will show you the difference between employees who have a difference in worksite state and resident state. So for example, if you have an employee who was in California and working in California, but then moved to Tennessee and has updated their address, this report is going to show you that the employee has a Tennessee address, but a California worksite location. And so that's going to help you determine, is this an employee we need to look at, and do we need to consider changing that worksite location within the system? You're going to know your situation best and whether or not a worksite location should be updated, but just know that all employee taxes are based on resident address and worksite location. So any changes that are made to either of these can have a tax impact. And then resident location change, same thing. Please encourage your employees, go into the portal, look at their address, see what's in there, maybe even look at their paycheck stub, look at the taxes that have come out. If we can get this done before end of year, and if employees can make any changes and we can fix things retroactively in this year, it's going to prevent them from having to have a W-2C next year. W-2Cs, it increases the cost because we have to do amendment fees. It also delays the length of time in which an employee has to file their taxes, meaning that they're not able to file their taxes when they want to. And a lot of times employees discover this information when they sit down to start filing their taxes. So really important to just remind your employees, review the information. You can look in the portal, you can look at your latest paycheck stub, but I highly, highly encourage this as a reminder to everybody. And then lastly is visa changes. This comes up a lot, F1 and J1 visas. So for those of you who aren't familiar, if you have an employee who's on an F1 and J1 visa, they're actually FICA exempt. So that means that if we're notified of that visa, we make an update in the system so that there is no FICA assessed on the person. But if that visa expires, they may start experiencing taxation again. And so it's really important that we're notified of an expiring visa if that visa is renewed, so that way we can update the system and prevent the employee from being taxed unnecessarily. And then if you have any employees who are changing to an H-1B visa, this typically happens after an employee has been on a visa for about 5 years. Make sure you're reaching out to the payroll specialist so that way documentation can be provided and we can get them switched over to that H-1B status and make sure that all taxes are being assessed properly. A couple of items that are already accounted for. So group term life imputed income. So for group term life insurance, if you have a plan that is in excess of $50,000, that is why you might sometimes see the GTL amount on somebody's pay stub or on your own pay stub. What this is imputed income for plans over $50,000, and this is so that the taxes can be assessed on that GTL amount. So this is already handled through Sequoia and there's no action required by you. Domestic partner imputed income. So domestic partner imputed income is a result of somebody choosing to enroll his or her domestic partner through their benefits. And the IRS has determined that when a domestic partner is covered, any of the employer contribution to that coverage is considered taxable to the employee. So your employees might ask you, I believe on the paycheck stub it says DP imputed income, and that's what that is. So it's for any domestic partner coverage, and that's so we can assess the taxes and have those withheld from the check. And then third-party sick pay. If you have any employees who went on an LOA, received disability payment, those wages are all considered taxable. And so whoever issued those payments, whether it's the state or whether it's Guardian, they will be providing a statement to the employee at the end of the year. So that way the employee can file their taxes appropriately and show any payments they may have received from one of the agencies. A couple of notes about mass changes. So we know, especially at the end of the year or beginning of the new year, we see a lot of requests for changes in salaries. Maybe you're wanting to give a bonus to everybody on the last day of the year. You're wanting to set up scheduled payments. Those are all things that we can help you with, and we can walk you through how to do it yourself as well. So multiple salary changes, we never want to see you doing a lot of manual work on your end. If you have pay rate changes that you're going to be doing for 10 or more employees, please reach out to us. There is an import that we can do on our end to make this a much easier process for you. We never want to see somebody spending, all of that time doing 100 different pay rate changes. That's not fun for you. And we can make that a much smoother process. And if it's a retroactive payment, we can also help with that as well. We would just ask you to provide us the previous salary compared to the new salary, and then we'll calculate the retro for you and import that into the timesheet as well. It's just another way to make that little step easier for you. Multiple bonus payments, again, there is a way to import that directly into the timesheet. Sequoia can certainly help you with that, or you are able to do that yourself. That's something that a lot of our clients don't realize. There is an article out there called How to Import Earnings into the Timesheet Entry. We will be going over articles here in just a little bit, so that way you can see where those articles are at and how to access them. But reach out to your payroll specialist if you have any questions, and he or she can help you. And scheduled payments, we know that there's a lot of requests for scheduled payments, especially right now. Things like internet stipends, maybe utility stipends, could be office supplies for work from home setups. So there is a way to set up scheduled payments, so that way they occur on either every payroll or maybe on just one payroll of the month. It's a great way to get those stipends in there if this is something that you're interested in doing. There is an article on this about how to set up scheduled payments, and your payroll specialist can also help you with this as well. And so recording 2020 taxable events, I really think that the 3 items above kind of help us address recording 2020 taxable events. So you're either going to be recording items en masse, or you're going to be having one-off items, or you would like to have the tax liability assessed over the last few pay periods of the year for any of those items. Just reach out to your payroll specialist. We can walk you through what the best approach is for getting these recorded, and how we can make sure that your employees have everything captured on their W-2 before the end of the year. That way we can avoid any W-2Cs, and then you guys can also avoid some of those costly tax amendment fees. Deadlines and due dates for all of this. So these are really important. So for quarters 1, 2, and 3, if you had items that occurred in one of these 3 quarters and it needs to be recorded in one of those quarters, the deadline for this is October 30th. That's going to give us time to be able to get the information into the system. If you are a client who has not been with us all year, and you were possibly with a previous payroll provider, there are some items such as stock transactions that would need to be recorded through that previous payroll provider. There are other items such as gift cards or some of the other fringe benefits that can be recorded all at the end of the year without any issue. So just reach out to your payroll specialist, and they can help you determine whether or not Sequoia One can record items for quarters 1, 2, and 3 if you were with a previous payroll provider. For quarter 4, we're asking that everything is submitted to us no later than December 23rd. I know that for many of you, this is also the timesheet due date. And so that's why we selected that date. December 23rd works very nicely for the December 31st pay date. It's going to allow us to get everything in time for December 31st. And that includes any bonus payments you're wanting to make on the last day of the year, or any items that just need to be recorded for 2020 in general. And then my last call out is about the payroll funding reminder. So each of you should have a payroll calendar that you've been provided. Sequoia One strongly suggests that your payroll funding bank account has adequate funding in it 3 days prior to check date. So you'll notice on here, I've identified these dates. So for example, November 13th is a pay date. So that means that the funding should be in your bank account by November 10th. first thing in the morning. So a lot of our drawdowns can start as early as 6 a.m. So we do say that the drawdown will be completed no later than 3 p.m., but it is important to know that these do begin early in the morning. So it's really important that that funding is available 3 full days prior to check date. And if there's ever any time that you have any issue with this, if you have any issue or you're anticipating any kind of funding issue, please reach out to your service team as soon as possible so that way we can work with you on some solutions. And a little bit about FFCRA and CARES Act. So this is a reminder that the FFCRA and CARES Act is set to expire on December 31st of this year. So what does that mean for you? It means that starting with your first payroll in January, you will no longer see employee retention credits, you'll no longer see employer Social Security deferrals, and you'll no longer see credits related to the FFCRA pay codes. If you are a client who has elected the employer Social Security deferral, it's really important to remember that at least 50% of that amount is due to the IRS by the end of 2021. The remainder amount is due by the end of 2022. One of the questions that we get a lot is, can we pay early? You absolutely can. The IRS will have no issue if you send them that money early. And how much Social Security did we defer? So we do have some reporting available. One of them is our CARES Act credit tracking report. So if you reach out to your payroll specialist or your client account manager, we can help run this report for you. And it's going to show all of the Social Security you deferred through Sequoia One. If you were with Sequoia One for all of 2020, this report will show you the total amount deferred. If you were with another payroll provider and also deferred Social Security taxes through that payroll provider, you will need to reach out to them to get those amounts because we do not have those amounts deferred with a previous payroll provider. Another way you can get the amount that you deferred is by looking at your Sequoia One invoices. So those invoices do have a line item on there that says CARES deferral, and you can see the exact amount on there. And then repaying your Social Security, you will need to repay this directly to the IRS. So this does not funnel through Sequoia One. And there is a link here to that website. You'll need to create an account through the EFTPS website, and then you can proceed with making payment. I know a lot of the questions that we get is, well, our Social Security is usually paid through Sequoia One and under Sequoia One's FEIN, and that is true. But when we file our taxes, we also file something called a 941X, which basically is what takes those amounts and divides them out under your own FEIN. So that way, the IRS is aware of what amounts are actually allocated to you as a client. All right, we're going to jump into some of our Q&A that we have. It looks like Tasha has been able to answer some of your Q&As that you've already asked. I'm going to give it just a moment to see if we have any other Q&A sessions come in. Okay, one question that I see that I think is great that Tasha has already answered, but I'd like to give visibility to everybody else. Is it required to report reimbursed cell phone internet expenses, employee paid, when the employer requires the use of these personal items for business? So reporting reimbursed amounts, I think what you might mean is reporting to any of the tax agencies. No, that is not required for you to report it. However, I would suggest keeping business records on any expense reimbursements you paid. That way you have an accurate recording of what has been paid, who it's been paid to, and the amounts. This could be important in case an audit were to ever come up and you needed to provide substantiating paperwork or documentation with relation to expenses. Do reimbursements for morale need to be reported? Since the shelter in place, we've been given employees a 150-month allowance to spend towards whatever they want, so there were a wide variety of expenses submitted. We used to offer free snacks and meals 2 times a week before the shelter in place, and this allowance was intended to replace that as well as keep everyone motivated during the pandemic. So this is a great question, and I will answer this two ways. So $150 for morale, yes, that should be considered taxable. However, there is also a section of the IRS code, it's section 139, and it's related to disaster payments. And disaster payments, it covers a lot, but the part that I specifically want to speak to that it covers is it includes covering things like work from home expenses, utilities, internet, supplies somebody might have needed in order to successfully work from home. So if you feel like those payments qualify under section 139, those would not be taxable. Again, if you're just providing $150 because you're wanting to be generous and you're wanting to make sure that people feel like they're still getting a nice perk from you, I would go with the side of caution and consider that taxable. So it's really important that you're just looking at the reason behind the payment and whether or not that falls under a specific IRS code. If you have more questions about that one in particular, happy to talk through that outside of this meeting. Your payroll specialist can also help you with that question as well. Okay, how will Sequoia communicate with employees about end-of-year action items? So this is a really good question. So Sequoia is going to be communicating with employees through their work email address that is currently assigned in their account. So it's really important that everybody has a work email address assigned. You can run an audit for this, and I would suggest that if you find employees within your company that do not have a work email address assigned within their profile, that is then updated. Employees can update this within the portal, or you can also update that within their record within Prism. Okay, next question. Are work from home supplies taxable? Do we need to collect receipts? So I've answered this in part already, in that the work from home supplies are not taxable. Those can be considered reimbursements. But the second part of this question, do we need to collect receipts? That's going to be up to you. So Sequoia is not going to require you to collect receipts because we don't do anything with those receipts. But from a business record keeping perspective, I always suggest people to collect receipts. I think it's just a great practice. But again, referring back to that section 139, the IRS does state that receipts are not required if it's a payment that falls under section 139 disaster payments, and work from home supplies do fall under that. So that's really something for you to take in-house and discuss. My other suggestion is to make sure it's a reasonable amount. So I had one request earlier this year to pay all of the employees basically $1,000 a month for supplies and have it be non-taxable. And while I can definitely appreciate that, the warning that I heeded was that that may not be an amount that you'll be able to substantiate to the IRS as non-taxable. So that's my biggest takeaway for all of you with that, is make sure that it's an amount that you can substantiate and that would be deemed reasonable. And then if we have items to record, what's the best way to submit this information? That's a great question. So the best way to submit the information is to reach out to your payroll specialist. They can provide you templates and tell you exactly what it is that they need. Basically, in short, what we need is we need the employee ID number, the employee name, the amount, and then the type of payment that it is. So just those few items will allow us to go ahead and get that recorded within the system. But again, I strongly suggest reaching out to your payroll specialist, and they can walk you through all of those requirements and also make sure that they're helping you to stay compliant and really understand what your needs are. Another question came in regarding worksite location. How should we treat employees who choose to move around in the remote working environment, or if they decide to give up their residence and choose to work from different locations? What is their resident location and worksite location in this situation? That's a good question, and it's a tough question. So There is not a black and white answer to this right now. We are very much living in the gray. And I would suggest talking to your in-house legal counsel or tax counsel on this. I have been doing a lot of calls with clients around this topic exactly. It's tough because not all of the states are giving the same guidance. You have some states out there that are saying, if your employee is not a normal permanent resident of the state, please do not tax them here. You have a state like Illinois that says absolutely tax them here. And then you have a lot of states that aren't saying anything. So looking at the state-by-state guidance is important to determine what the expectation is. And then also kind of taking that in-house to determine, you know, what's our risk and what do we want to consider here? You know, we have an employee working a week here and a week there. Is this something that we need to take into consideration? Ultimately, for the employee's resident address, the employee needs to determine where are they liable for taxes. So where are they a resident of, and basically what state is going to be expecting them to be paying taxes to that state. And that's how they should determine their resident address. And I'm happy to have more conversation about that offline. I know this is a pretty in-depth question that comes up a lot, and there's a lot to consider. Okay, it looks like that is all of our questions, so that's great. I will check this again in just a moment after we get through some of our resources and tools. So if you have more questions that come up, just feel free to continue using that Q&A chat session. So Sequoia resources, I want to go through a little bit about this because there are some great tools out there that I think a lot of our community just doesn't know that we have. And so when we start talking about tools and resources, we have this great place called HRX. And if you don't already have a log on to HRX, please reach out to your account manager and that person can help get you set up for HRX access. So within HRX, we have this neat little place called Connect. And within Connect, you can reach out to different service team members. You can also look at communications that you've had. And then there's also something here called articles, which is really what I want to highlight today. And you probably heard me mention earlier in the session that we have articles that you can go look at that are going to help navigate you through a process or how to do something within the system. And so these articles are all here. You have topics off to the left over here. And you've got some information here as well as trending articles over onto the right that you can see. And so really what I want to talk about is I want to talk about payroll articles because those are the ones that I love. And these payroll articles are fantastic at walking you through reporting, walking you through how to handle a pay rate change or how to handle retro pay. And so looking through all of these articles, you can see that there's a lot out here. You can also simply type up here in the search bar and that will start to populate something that you're looking for based on keywords. So lots of information. If you're somebody who's looking to be able to import into your timesheet, you can find that article within here. If you're looking for more information on imputed income, you can find that in here. And you can also share that information with your staff when it's appropriate. So please make sure you're taking time to check out Connect, check out these articles. It's a wealth of information and we're continuing to add information in here every single day. And it can really, it can be a very, very useful tool. Okay, so our next item is return to work. I'm not sure how many of you have had a chance to check out our Return to Work Center, but we developed the Sequoia Return to Work Center as a way to help companies address the complexity of in being at work, returning to the work office, just in this dynamic environment. So there's a lot of opportunities here. It provides employee health and safety information, business health and safety information. And if you'd like, you can check out any of our demos. We do host demos twice a week on the product. It's just a quick 25 minutes. You can find it by going to sequoia.com/return to work. So I highly encourage everybody to check this out. We use it internally. It's a fantastic tool for us. And then along with our return to work, we also host some webinar series. So workers' compensation is our next one. That's going to be happening on Thursday, October 22nd from 11 to 12 p.m. Pacific Standard Time. And then just some resources for your employees as a reminder. We do have the wonderful Sequoia app. We all use it internally. It's fantastic. It tells you information about your personal benefits, apps and perks you have available to you, information about where you're at with your spending on your insurance, concierge information. So highly suggest everybody look into this. I use it every time I go to the doctor. It's absolutely wonderful. And then we also have the Work-Life Portal. The Work-Life Portal is where your employees can log in. They can view their paycheck stubs. They can change their address. They can change their direct deposit. They can look at their benefits, request time off. So all kinds of information within the Work-Life Portal. It's a wonderful tool for your employees to be using and to be more self-service. And then just a plug for the rest of our end of year payroll webinars. We do have 2 more webinars coming up in November, so November 3rd and November 5th. If any of your colleagues haven't had a chance to attend today's webinar or Tuesday's webinar, we'd be happy to have more people join our webinars. And again, if you need any help with anything, you know, our payroll specialists are here to help out, along with our HRBPs and our client account managers. We're really excited to help walk you through the end of the year and help to make you feel like your payroll is in order and that everything is successful, and to also make sure your employees have a great experience. So thank you everybody for attending today. Let me just take a quick peek at this Q&A, see if we have anything else. Where is the Connect tab? That's a great question. So if you log into HRX, your Connect tab is going to be in the lower right-hand corner of your screen, and it'll say Sequoia Connect on there. Or you can also click on any of the pictures of your service team members, and then you can access Connect that way as well. All right, everybody. Well, thank you so much for your time. Thank you for attending. Please reach out to your payroll specialist if you have any outstanding questions, and we'll be happy to walk you through it to have a successful year end.